And now is a good time to welcome everybody back then. Hi, everybody. Welcome back to the second half hour of Green Rush Live, our regularly scheduled every Friday afternoon, really live business of cannabis talk show. We have an open chat room. And of course, if you have any questions for our panel, be happy to share with them, because now I can actually see the chat room as opposed to not being able to see the people I'm talking to on Zoom, who are a good 15 feet away in a very tiny little box. So welcome back to Green Rush Live. I'm Jimmy Young, the founder of Pro Cannabis Media, joined every Friday afternoon by my guest hosts, Josh Kincaid and Doug Miller from New Jersey and Washington State, because we love to connect both coasts. And now we're going to welcome in three guests this half hour. One is no stranger to the show. One is always welcome on the show. And I'll let Scott Moskal from Burns & Levinson and Jacques Santucci from Opus Consulting figure out which one that is. But I also want to bring in John Morier. Is it Morier or Morier?
Morier, you got it right the first time, Jimmy. Thanks.
Thank you. I appreciate that. I put a little Frenchie on there because after all, Jacques is with us and you guys are in Portland, Maine. And after spending 11 years there myself, working for the CBS affiliate, I know that the French Canadian is a major player in Maine.
That's for sure.
Maine business, politics, culture. So all three of you guys, thank you so much for coming on. So the reason why I have you coming in here is to explain how Ermont, which was one of the first dispensaries in Massachusetts, and now has another distinction, I guess, about being one of the first to go into receivership. Who wants to take me through the history of what happened to Ermont? Scott or Jacques?
How about I explain who Ermont was, and then you explain how the receivership started?
Sounds like a plan. Maybe you should have your own show, Jacques, which I've been talking to you about for a long time. Go ahead.
I used to have I had a radio show for 10 years. So I would be, I like that kind of stuff. So
but you don't have a face for radio though, Jacques. I know that. Okay, I'm comfortable saying that. All right. Go ahead. I'm sorry.
Go ahead. Joke. Face made for radio? No.
Yes.
Yes, that's right. Well, I have the accent. That's good.
That's right.
So Ermont was one of the first medical marijuana licensees in Massachusetts, license number 7, started in 2016 out of Quincy, Massachusetts, south of Boston. They were one of the first ones to get off the ground and open, vertically integrated, a few rooms growing in the back, packaging, and then the storefront out of the parking lot in just off the highway.
All right. So how did they get in trouble? Who's next, Scott?
So so they had a debt facility with Tilt, and I think many people remember the Dan Adams story regarding Tilt and what happened, and we could just go from there. But to make the long story short, my clients purchased the debt from Tilt, and they made a demand on the note and made demand to have simple things like financial statements sent to us, and basically Ermont said go pound sand, or the directors at Ermont was a not-for-profit. So we initiated defaults and accelerated the debt. And at that same time, the CCC had just initiated or passed a new provision to the regulations, which allowed for a receivership or court appointee to be appointed under certain conditions. So we went ahead and we petitioned the court for a receivership to be placed on Ermont. But before we could do that, the regulations provide for a method for a potential court appointee, or a receiver, to be pre-approved. Frankly, didn't have control over 3 or more dispensaries, the rule of 3. And so Jacques employed or retained Kasner & Edwards, which John Morier is here, and John and his partner Michael Fencer worked to get Jacques pre-approved, submitted the appropriate paperwork. And I think Jacques was the first one to be pre-approved. I think there might be others since. But once we got that pre-approval, Teneo filed a petition in late July of 2021 seeking to have a receivership imposed. And it took us a few hearings before the court before they granted the relief we sought, and the entity was put into a receivership in November 2021, at which point Jacques as receiver took over, and John Morey as his counsel helped guide Jacques through the legal process of the receivership and the court hearings.
There you go.
And I should add, Jimmy, that one of the uniqueness that Opus Consulting, our firm, has is that outside of the experience we have in cannabis, we've been working on distressed assets and business management for now over 13 or 14 years. So, that was a good way to bring two set of skills, right? The cannabis knowledge and the process of distressed assets and receivership and bankruptcy work under that process for Airmont.
There you go. And John, I want to bring you in as well on this and ask you a question, since I have two lawyers in the room. Have the courts eased up at all on any of these receiverships and disputes that are coming now before them? Has it eased up at all? Are they accepting the fact that cannabis is here to stay?
So I think that's a great question, Jimmy. And there's a difference between the federal courts and the state courts in states where it's legal. So, if this was the bankruptcy lawyer podcast, I could go on for an hour about attempts to expand jurisdiction and bring cases, insolvency cases, into the bankruptcy courts. But for all intents and purposes, the federal courts are shut to cannabis businesses, and in some cases even employees of cannabis businesses and the like. So this case was brought in Massachusetts State Court, and Mass has had medical legalization since the referendum went in 2012, and has had adult use at least voted on by the voters at the end of 2016. So they're used to it. But that said, this was the first cannabis case in Massachusetts State Court of a receivership type. So it was the first time the Cannabis Control Commission was involved. It was the first time the State Superior Court was involved. And it was the first time some of these regulations were, ever used as far as cannabis. So the court was reluctant and curious. As Scott mentioned, it took a while between the filing of the case and the actual appointment of the receiver. The court gave the debtor plenty of chances to produce its financial information that was required and to make payments of both, its creditors and its taxes. But as the creditor, as the debtor, Airmont was digging a slightly deeper hole week in and week out rather than getting improved. The court finally pulled the trigger and said, "Yeah, you need a receiver." And what the receiver does, there's an order of the court that sets forth what their duties are, and it basically runs the operation in place of its management, or in place of its board of directors in this case. So the court got comfortable with it, but it took a lot of walking through. It took some dealings with the commission and their staff to, find our way together. And then set it up. After that, we reported regularly to the court and to the other parties, and everything we needed to do, we had to either follow the order in place or ask for more permission.
I think one of the things that is important also, why it took so long, Massachusetts, in sort of non-cannabis world, we don't have a receivership statute. So for instance, in Washington State, there is a statute 20, 25 pages long, which provides for a procedure for receiverships, and then the Washington cannabis regulations just kind of added to that. So there's always been a path, whereas in Massachusetts, receiverships are very rarely granted to begin with, or very rarely, or not, I shouldn't say very rarely, but it's not as common as many other states which have a separate receivership statute. So we had to deal with that together.
Yeah, and there's pluses and minuses to that. I mean, in Massachusetts, since we're just going over a rule that says a court can appoint a receiver, that's almost the entire rule right there, then the powers you have are the ones you could convince a judge to give you. You've either negotiated with some of the parties or had an argument in front of the court about what's appropriate. And so we were really able to design what the receivership for Airmont would look like. We gave the receiver, we suggested that the court give the receiver the power to run the place. Perfect. That's a necessary thing. But we also suggested that the court give the receiver the power to market the business for sale, to do other asset sales and the like. But then the court, and we suggested this as well, we agreed to it, but the court required us to go back to court for actual permission to sell. You could offer the business for sale, but we needed a court order in order to sell it. So that's kind of the example of the push and pull that goes into, a build your own receivership in a state where you don't have a specific statute.
Although I will say we scoured other courts for their receivership, typical receivership orders in a cannabis, and actually the CW Nevada case, their receivership order we took a lot from as well. So I would love to say we created it all by ourselves, but there was a lot of precedent out west that we're able to cobble together.
Speaking of out west, we have somebody in Washington State on this call on this show, Josh Kincaid. And Josh, I'm sure you have perused that 25 pages that is available for receivership in Washington State. And don't forget to unmute yourself.
Thanks for the reminder. Yeah, I was going to recite that verbatim, actually, Jimmy, but we don't have enough time, so I think I'm just going to skip straight to the question. I'm hoping to get some of you attorneys to speculate on the motive, because I don't understand the intent on why somebody would let that default and go into receivership when you've got a really hot item that you could probably profit on. Even if you don't know what you're doing, you can maybe sell that. And so I'm curious, two-part question. One, why didn't that individual sell? And two, what's going to be your strategy now? Are you going to be a turnaround strategy, or are you going to just be a flip?
So Scott's got an actual client that could actually divulge its thinking, and maybe I'll do him the favor of taking up the speculation cudgel you laid down. We came into this in the middle, and I think, Jimmy, your last show, the folks from Upwise said, there's a lot of creative, non-traditional financing out there. Airmont had that kind of financing.
Yeah.
It was cash flow to begin with. So if there wasn't excess cash flow, there weren't any payments. It had borrowed initially around $10 million. It had refinanced that for almost 13 and had never made a principal payment. So that debt had been accruing interest at a pretty good clip, above LIBOR. And whether it was above the cannabis market or not, it's a good question, but it was certainly above the commercial market. So the debt on this, the secured debt, was well in excess of any reasonable sale value. So this had to be a short sale. And then the tension between the directors, and this was a nonprofit, so the directors didn't own the company, but they ran it, and the lender, who wanted to maximize its recovery or start getting paid something, that tension in there is kind of an impasse. Nobody will come in and refinance that debt. It was too high. Nobody would come in and try to convert this to for-profit and put in, say, a stock, an initial public offering or some such, a private offering to put stock money in. And so it was just kind of sitting there without enough capital to grow.
Well, and let me, because some of this is public record. So my client bought the debt. My client had previously been involved with Tilt, had positions at Tilt, actually had been involved with the Airmont relationship at one point. They since left. They do not own anything of Tilt, but they knew of the potential asset. They bought the debt at a deep discount, which that agreement has been published and referred to in court pleadings and CCC. So it was a traditional loan to own. It's a traditional type of strategy employed in bankruptcy and workouts. The lender has some debt. Lender doesn't think they're going to get par, and more trouble than it's worth, so they sell the debt for another entity at a percentage, small percentage of the actual UPB or unpaid balance. And my client thought either A, they could force a sale and get a return, or if they had to, they've been operators in the past, and they would essentially take over the facility themselves and turn it around and flip it if need be.
And
So
so,
this is all
Josh,
very commonplace in the workout world.
Go ahead,
and
Jim.
Josh, I think your question was also what happened. So the receivership, right, ran its course, and one option was to sell the company, right, like, or sell the asset, like Scott said. So over a year ago, we looked at the different options, and then put the assets on the market. Asked, I think 20 or 25 people around us, and got a few offers. And then since last summer, the offers have been, vetted by the court, approved by the court, vetted by the CCC, approved by the CCC to get to a closing last Thursday.
There you go. That's called cannabis standard time. You know how that works, guys. However long it takes is what the time.
Yeah.
As you mentioned stocks, we've got a stock expert on our show on a regular basis. That's Doug Miller. Doug, I'm sure you have questions for the group. Go ahead.
Yeah, can you actually make it from a nonprofit to a profitable organization? Because you were saying it's a nonprofit, so when you take it over, can you actually change it around now, the structure?
Yeah. So when the 2016 referendum was put into place in 2018 through, was it 94G or whatever it was, they allowed, so originally medical marijuana facilities had to be not-for-profits. As a structure, 2018 enabling legislation allowed them to convert to for-profit. But just because you're for-profit in terms of corporate structure doesn't always mean you're making a profit. So here, not-for-profit, they're basically, you can't really buy a not-for-profit, more or less. So anyways, the assets were purchased by Meramed. So Meramed's a publicly traded MSO, and they came in, and thanks to Jacques, really doing a great job of marketing the assets for sale. We got a really nice, well, the receiver got a really nice offer, and it was a great result for everyone, from what I understand.
And Doug, to your point, so a nonprofit is just the fact that there is no owners, but the company should be run just like any other for-profit, right? Because then the cash that's left is reinvested or something like this, right? To continue to grow the nonprofit.
Absolutely.
There are some tax advantage when you convert to for-profit. There's some strategy to use, because when you go to for-profit, you have a tax event. So probably you don't want to talk about the strategies here, but then at that point, right, you can convert to a for-profit by saying, okay, Doug and Jacques now own 50-50 of whatever assets we have here, and that's what the tax event is. But you can go
do that though, technically, because we had to do this when we converted a lot in 2018. You have to get a valuation of the assets, and so those who take stock in the new for-profit may have technically income attributed to them. So there's a lot of tax issues.
Strategies. Yes.
I'm going to ask a question that
home kids without a lawyer and account. How's that?
Thank God that we have them. All right. Question for you guys. I happen to know that in the very beginning of the medical program in Massachusetts, the dispensaries had to be vertically integrated. They had to grow their own stuff. Okay. That's the best way to describe what vertical integration is. And now there's some movement, and I believe there's a bill in the Massachusetts legislature to allow that clause or whatever it was to be either changed or ignored, or you guys tell me. How did that impact this at all?
No, this is a medical marijuana facility, and the buyer actually wanted the extra grow space. So at the end of the day, that didn't really impact this.
Okay.
But it's a huge issue in the industry, obviously, and a lot of folks aren't actually applying for a new medical license as much as you would expect, because they don't want to spend the money on cultivation, especially with such a glut in the market.
Yes.
Right.
And then Airmont too had a nice building, or is housed in a nice building, who has a very good setup for grow and other activities. So that was part of the attraction there.
Plus of that mezzanine, right, the room to grow up. So
do you foresee any others going under, or they're going to have to be taken over? Yeah,
Yes.
I
I mean,
kind of
there's a
figured.
lot of distress in the industry, a lot of distressed sales. I think, the multiples have gone down from even a year and a half ago. On cultivation, it's very, very, unless you're already established and have your brands and your market, it's very difficult to break in right now.
And
Um,
then and then when you see that the wholesale price in Massachusetts and actually Michigan and other states, right, went from 4,000 to 2,000, if not 1,500, right? And then a lot of companies didn't have cost accounting in place, were not having any strategies to mitigate those risks. When you see that people are buying less, or when you see that some leases were signed 3-4 years ago, where it takes like 30% of profits, or all those things, right? They're going to lead to some businesses that gets in a put in a corner.
Well, at least
So
we've
where are you
got a,
guys seeing?
go ahead, Josh. Go
Where you
ahead.
got? Well, I was wondering where exactly are you seeing? What regions are you seeing that distress at, and what sectors are primarily the most distressed?
I think you're seeing it all across more mature states. So, Michigan just had the SkyMint receivership, which is a huge deal, which we are involved with. So I can't really talk about it. But you're seeing it, like even in Colorado, you have people throwing the keys and saying we can't make a go. It costs us more to keep the lights open than we're selling. And
Mhm.
so they just close it down. And there's been some similar stuff in Massachusetts, actually.
Yeah.
And there's also some, I'm sorry, John.
Yeah, Nevada, California has the same thing, all the mature states. Even in New England, you see some smaller operation trying to sell where they were, really going super well a couple of years ago. The reason they're selling is they're starting to see that their margins are getting smaller and smaller, and they're trying to get out of it.
What's
So different stages, but
But
very
also, I
similar.
think it's because you also have to take into account the new states coming online. So there is limited capital, limited liquidity, but there was some enthusiasm for New York, New Jersey, and we can talk about that as a whole different thing. But you still have Maryland. Missouri has turned into a nice little investment spot. We have a client there, and they're doing like 2 to 3 times revenue in not the best of places. And there's a lot of optimism in Pennsylvania and Ohio. So it's kind of like people are playing the map, right? And they're trying to go to wherever place is hot, and that does or affect, I should say, where people want to deploy the limited amount of capital that there exists.
No, I invest in things. I have a CBD company. I'm in New Jersey, and I was gonna have a testing lab. I shot that down. I mean, I've had every single investment opportunity, and I've told people, bigger people to me, like, yo, be careful, because I'm telling you, this kind of business, you have to know business and the
Yes.
cannabis industry. And a lot of
Yeah.
people know business and they're great at it, but they don't know nothing
Yeah.
about the cannabis industry, and you're going to lose a lot of money. They'll bleed money out eventually.
Yeah.
We see what's happening.
That's just really interesting because New Jersey just said, "Oh, we're going to issue more cultivation licenses, so we don't have enough stuff. We don't have enough product quite
Hmm.
yet, but in a year,
It'll
all
be
of
too
that's going to
much.
be wasted money."
Yeah,
Not, I
and
should say all of it, but
a lot of it. But honestly, I say New Jersey kind of, and they didn't mean to do it kind of right, but they almost kind of did it right by limiting how many dispensaries. Now, granted, they're all
Yes.
basically MSOs, but a lot of like mom and pop people that had the opportunity that were trying to get in probably saved themselves a lot of money in the long run, because they just wouldn't have made it. And so I mean, it kind of stinks. Like I say, I have the cure release right around the corner from me, and the product is not good at all. I mean, I just call it how I say it, but it is what it is. And that's part of the whole MSO thing, and I think we're going to see better quality as they start
But
shutting down,
Yeah,
because you're
I
going to
think that's
have
part
the
of the brand. And Doug, I think that's part of the branding or
Mhm.
brand with the the micro brews. So the
yes.
micro, like the craft cultivators. And I
Yes.
think as people, we have to remember it's still a relatively new market to like 95% of the population. And I think as people get more used to the product, as we expand our industry, past people on this on this podcast to like mom and dads and this and that who'll go in, I think you'll develop a little bit more of the ability to kind of like, how Sam Adams first started, right? Or Harpoon, all that stuff. They're not exactly microbrews now, but they started as back in the day and had to educate people as to why they were different from Bud, and Miller and whatever else was on the market then. And I think that's part of our industry struggle is we need to educate as well as just pretend we're just selling stuff at retail, right?
Right.
And that's the difficulty.
And Doug, I think going back to what you were saying earlier, or we were saying earlier, you got to go back to basics. It's business, and then it's branding, and it's customer experience, right? I mean, all the cannabis companies have been involved, vertically integrated or just retail. We always had that strategy. Who's our customer, right? So, if we look at the beer or even coffee, right? Starbucks or Budweiser, right? They sell coffee to the masses, and that's one segment, and it's probably the biggest segment. And then you have the small microbrewery or the local coffee shop, and they have a smaller segment. But if both are run properly with the right level of products and quality and the customer experience, then they'll do good. Trying to be a microbrewery and be in every supermarket in the US is not going to work.
Yeah, you can't do it.
Or thinking that you can beat the prices of Budweiser by being a microbrewery, it's not going to work. So I think the cannabis industry or a lot of operators in the cannabis world now are thinking they can do it all, and they don't understand that there are multiple levels or multiple types of buyers, and they're all good. They all want to have the product. We cannot sell to just one persona. It's different persona, different locations. It's multidimensional. And then if you apply the basics of business, then you'll find your way, right? Like you were saying in Missouri, right? Or wherever you were saying, right? There's a location with somebody who's got a right store with the right product. But then if you do the same store downtown Boston or downtown Seattle or wherever it is, it's not going to work because it's the wrong market and the wrong people. So everybody's got to think about where do they want to be.
But it is still retail, right? So location,
Yes.
location.
Yeah.
The days where you could put a dispensary in Leicester and have 5 zillion people lined up are gone. And people I think don't remember that it's foot traffic, it's
Yes.
parking
Just
spaces.
it's a quality product and customer experience. It is
Every time.
Yeah. Oh, it's yes.
No, I'm all about having the most quality. If I'm going to be paying for it, I want the most quality product. And I always say you can't make quality medicine without the most quality product. And I say it often on here, you need a lot of really knowledgeable growers to be able to pull it off.
Yes.
And that's where the MSOs go wrong. They make these huge facilities and they don't have the people to really operate what they need to do at that level. And it kind of goes wrong. And then you start burning through cash and it ends up being a bad scene. And then you have bad products. So you start getting a bad name, less customers, and it's just that trickle effect.
But you have to give credit to Curaleaf, how they closed their cultivation west of the Mississippi, right? California, Nevada, or Colorado.
And Colorado, yeah.
Yeah, I mean, they realized there was such a glut of product, and I have to imagine they realized they were becoming the Miller or Bud of cannabis. And did they really, for what they were trying to do on the retail side and the branding side, did they really need to grow and spend all that money at their grows out there?
Yeah. I do want to ask a question to the group here because all of you are smarter than I am when it comes to business. I can tell you that. Not that that's a very high bar. That being said, how normal is this development of a group in receivership in an early stage industry? Is this normal, or are we again seeing an exception being made because of 280E, because of the federal illegality status of it still? You know what? I'm going to start. I want every one of you guys to give me about a 30-second answer so we don't go too far over the top of the hour. Josh, I want to start with you because you're in a state that's had it legal for longer than any of us.
Yeah, I mean, it still happens. I know a farm that just got taken over in central Washington. Talking to the individual, 18 people making pre-rolls, spending $100,000 a month on labor, it just doesn't work. But when you don't take the advice and you keep going, eventually that investor is going to come in and take their farm back. So I've been seeing it for a long time, 10 years. I don't think it's common because you should be able to sell if you can't figure it out. But yeah, I mean, there's sometimes it happens.
John, go ahead.
Yeah, I think it's going to be increasingly common as the challenges, the industry matures, there's more challenges. You've mentioned a couple of the things that are specific to cannabis, 280E, barriers at the state line. But what receivership does, and what an insolvency practitioner can help with, is helping a distressed seller find a buyer for the assets. The other alternative is just run straight at the brick wall, flame out, fail, close, done. And so the receivership's a much better option if there's something there to be preserved, jobs, grow space, and the like.
At least they allow it. Scott?
So John and I actually worked together in a bankruptcy department at Mintz Levin in the early 2000s. And at that time was the beginning of the tech explosion. And so many of those companies right at the beginning filed for bankruptcy because they went fast, they got money, and then they couldn't, fulfill on their promises to their investors. And so you ask, like, is this normal for such a young industry? I would say, yeah. I don't think it's that young in many, many ways. And I also think that, like, this is just, I don't want to say survival of the fittest, but it is survival of the fittest, and meaning that those who don't understand business and don't understand the product and don't understand the ability to bring typical marketing and branding concepts to the industry are just going to fail. And it's better for them to fail quickly, and those who could buy the assets and turn it around, or, I think that's important. It shows the normalization of our industry, if nothing else. And that's important, I think.
I'm big on normalization, not necessarily legalization. Jacques, your observations about the industry right now?
Yeah, I would agree with my colleagues here and everybody else. I've been, we started in Maine in 2013, and when I was running my first models, I was thinking by 2015 and 16, we will start seeing things like this because, you could tell that the market would change. So it took a little bit longer, but we've been helping companies out of court, probably for the past 3 years. This one is the first one that makes it to court, and it's a bigger one, but we had to deal with smaller issues in the cannabis industry in the past 3-4 years. So I think it's classic. It's kind of normal. I agree with Scott about the technology. I think microbrewery is also going through the same thing, right? We're starting to see small companies that are struggling right now. They're not in court. I bet you within a couple of years we're going to see a couple of microbrewery in New England that are going to go through the same thing. And And I think it's going to continue. And if the whole industry is working together and listening, I think we'll avoid a big, because at the end, John was right. We want to preserve jobs. We want to preserve the market. We want to preserve the perception of the industry. So I think everybody's going to have to realize, let's all work together to smooth the path.
You know what's interesting? Like 2 weeks ago, right before SVB, failed, everyone was talking about VC, the VC market, high tech. Now, after SVB fails, right, the other bank was Signature Bank and First Republic, all of a sudden now there's not much liquidity in the high tech VC market. So, it's business. Like, it'll be very interesting to see what happens there and what similarities there are, if any, with cannabis, with a lack of liquidity and with people who probably were surviving on fake liquidity or fake promises of extra money, but should have been out of business a long time ago. And you see that a lot in the VC, high tech, and whatnot. So
this is why I preach the best investment in cannabis is a good law firm. Okay, it's very simple. Very simple.
How about a consulting firm too?
Okay, sorry, that's right. A consulting firm run by Jacques Santucci called Opus Consulting in Portland is a great investment. There you go. Jacques, thank you so much for joining us. John Morier, thank you so much for joining us. Scott, always a pleasure to see you. We're going to continue with Dr. Marion McNabb, and she has a new product coming to market that's called Undo. You figure out what it is, and we'll bring in Dr. Marion McNabb after this. Don't go away.
With that, we're going to roll this one up. I'm Josh Kincaid. This is The Talking Hedge. Don't forget to like, share, and subscribe, or don't, and I'm out. Don't forget to smash that like button on your way out and check out these other videos that we've got.